What were you doing at 11 years old? Most kids were riding bikes or trading baseball cards. But Warren Buffett bought his first stock. He spent $38 on shares of City Service, watched them fall to $27, and then rise to $40, where he sold just before they climbed to $200. That early lesson about patience, emotion, and long-term thinking stuck with him forever. And it became the foundation of one of the most legendary investing careers in history. Today, we're breaking down 5 investing strategies Warren Buffett lives by, with stories, clear logic, and whiteboard visuals that will stick with you for life. Let's jump in. 1. Invest in what you understand. Buffett avoids complexity like the plague. If he doesn't understand how a company makes money, he won't invest, even if the hype is massive. He calls it his circle of competence. Instead of chasing tech IPOs in the 90s, Buffett doubled down on Coca-Cola, a business he deeply understood. He once said, "I don't know how to beat Bobby Fischer in chess, but I do know how to play pretty well in my own game." The takeaway: stick to what you know. If you're into fast food, look at McDonald's. The more familiar you are with the business, the better your judgment, and the less likely you are to panic when the market swings. 2. Be fearful when others are greedy, and greedy when others are fearful. This is Buffett's most quoted strategy, and for good reason. In 2008, when the financial world was panicking, buy American. While others ran for the hills, he bought into solid companies at discount prices. This principle boils down to one thing: emotions drive markets. Fear causes crashes. Greed causes bubbles. Buffett sees fear as opportunity. If you can stay calm while others panic, you'll be able to scoop up quality investments on sale. But it takes courage and a long-term view. 3. Buy great companies at fair prices. Buffett doesn't chase cheap companies. He looks for quality. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. That's why he's big on durable competitive advantage, also known as a moat. Think of brands like Apple or Coca-Cola. They dominate their space, have loyal customers, and generate consistent profits. He wants companies with strong returns on equity, low debt, and predictable earnings. If the price is reasonable, he's in for the long haul. 4. Hold for the long term. Buffett once said, "Our favorite holding period is forever." He treats stocks like owning part of a business, not lottery tickets. Take his investment in Coca-Cola. He bought it in the late 80s and still holds it today. Over time, compounding turned a few billion into over $25 billion. Short-term noise doesn't faze him. Recessions, elections, wars, Buffett rides it all out. Why? Because great businesses grow over decades, not days. If you're checking your portfolio every morning, you're playing the wrong game. Patience is your superpower. 5. Cash is king. Buffett keeps billions in cash, but not because he's afraid to invest. Cash is his ammo. In a crisis, he's ready to deploy it fast. He once said, "Opportunities come infrequently. When it rains gold, reach for a bucket, not a thimble." Having cash gives him flexibility and confidence. It also protects him during downturns. But he doesn't hoard it forever. When great companies are on sale, he's not afraid to spend big. As an investor, you need balance. Build cash reserves during good times, and be ready to act when the tide turns. Warren Buffett's genius isn't just in picking stocks, it's in how he thinks. He stays calm in chaos. He sticks to what he knows. He buys quality. He waits patiently. And he's always ready for his moment. These 5 strategies have made him one of the richest and most respected investors in the world. Not because they're flashy, but because they work. And the best part? You don't need billions to follow them. Just discipline, curiosity, and a long-term mindset. So, which of these Buffett strategies speaks to you the most? drop a comment, and let's talk investing.